2009 and or 19, sorry. And we're going to take a look at the markets. Right now, you're looking at the pound versus the US dollar, and the market is just above its trend finding level. So the short-term trend remains bullish for now, and there's actually a chance for this to go upwards. But what is also interesting is that it has reached my sell zone. Up here, we're close enough to that major high, which is also the sort of longer term and sort of last major high here that could stop price from turning all bullish. Because for now, this still remains just a corrective phase in relation to this big longer term bearish trend that we're working with since April 2018. So it's going to be interesting to see what happens in the next few days. And it's also kind of interesting already today at 10:30 to be exact. Just on 10:30, we're going to have a ruling from the courts here in England if the suspension of the UK Parliament was lawful or not. Um, the government has said that if the court says it was unlawful, then the Parliament should be allowed to, or they're going to resume Parliament again, and the suspension is going to be suspended. So we're going to have that coming up at 10:30. Now, if we didn't have any sort of Brexit deal, if we don't really didn't have a law that forces the UK government to ask for an extension, then it would have mattered a lot. But we already do have a law that forces the UK government to ask for an extension if they don't get a deal, and I personally think Prime Minister Boris Johnson will follow the law and ask for an extension because I don't think they're gonna get a deal through. They might get a deal through before. I hope so because things are just taking a bit too long time, and we can see damage in the economy already. We already had high inflation immediately after the referendum, and people are not really that keen in investing. And you have a bunch of other costs that you need to set up operations overseas and stuff like that if you want to keep on trading. Not everyone, of course, but if you're in finance, it definitely is like that. So it would be good if they get something. That's my personal view. Now, technically here, and there's in the short term, there's just the uptrend, and the uptrend is bullish about 23.85. Okay, take that out, then we're probably gonna go lower. But if we remain above here, we can actually go higher. And if you are long-term bearish, then this could be the signal where you see the short-term trend aligning itself with the big picture. This is the euro. The euro has not done much since yesterday. So the market started trading here, and then you had the market PMI figures out, and those market PMI figures were actually lower than expected. They were out yesterday, and today we had another indicator, which is the German IFO indicator, and let's see how that printed. Apparently, German IFO disappointed. It came in at 94.6, so it beat actual expectations. Uh, okay. However, the expectations, so there's two different things, right? So there's like business climate and current assessment. So the current assessment is good, has a high correlation with German GDP, and it's higher than 98 and a half. Or it was 98 and a half, which is better than the 97. So that's the expectations for, or that's sort of the current state of the economy. This one has a high correlation with German GDP. But then you have German for expectations, which is what people think is going to happen in the future, and that one came in a little bit lower at 90.8 versus 91.8 anticipated. So it looks like the current situation is slightly better than expected. However, the forward-looking outlook is rather neutral. Sorry, it's slightly lower. Now, because I guess because there's a bit of a mixed bag of things here, people don't really know exactly how to interpret that. This hasn't been a major reaction to the euro versus the dollar, and as well, I think we're technically slightly oversold, and I reckon that we could potentially see this go upwards again. And I don't know if you noticed, but a few days ago we said look to sell up here. I have now adjusted this and pushed this down a bit, and I think people that want to sell again, they're probably going to wait until, I think at least, actually I'm going to push it down even a bit further. So 110.50, I think that could be a good little spot. And I think one can now lower the trend of funding level a tiny bit to something like 1090. So you risk about 40 pip. And if it goes down, you could potentially make 70 pip return. If you've been trading here, there's nothing wrong booking a profit here. I think in the long run we'll go lower, but it's a very weird market. Not a weird market, but it's not a non-trending market where you just need to take whatever the market gives you, unfortunately. Dollar versus the Japanese yen. So we're having a bit of a bull move today. Not a bull move, but the dollar yen is up a tiny bit. Dollar Swiss is up with, 2 pip. So, but there's a bit of a bullish momentum. You can clearly see it here. Now, in the longer run, it does look like, at least for now, if I hide everything. So this is the weekly chart. So according to this, let's actually load a different price chart. I don't always trust the trading view data. Actually, it was correct. So this is the FXCM data. You can see how we have this bearish candle that we had last week. So it does suggest to me that the longer term trend remains intact. And we moved really close to this level. And now we're in a level where I think this market could potentially turn higher. You might remember I said in the past, I said that the break here could lift things. Well, we went up to these levels. Now the market has been creating these higher and higher lows. But yesterday that failed. And for good reasons. Number out of Germany were not good. That puts the risk appetite down and boosts the yen. So create a lower low here. So now the trend is technically short-term bearish. And there's nothing wrong being bearish from here. But looking at this today, if we go up to 108, then that would not be unsurprising. But I don't think we're going to go much higher than 108. And I think as long as you're below 108.52, it makes sense to be bearish. Let's take a look at Brent crude oil. So this is Brent crude oil, and yesterday prices slid a bit, and the reason for that is that an unnamed source told Reuters News that the Kingdom of Saudi Arabia had restored 75% of their crude oil production. I wrote an article on that on Investing Cube yesterday, and that caused that little slide here. Of course, it's not an official statement, so we don't know for certain if it's true or not, but I guess Reuters believes that it's true, so that's why they went ahead and published that report. The market slid down to support. The market found some support here, and this is the same level I showed you guys yesterday. We're now back at support, and I still insist that the market might look to go upwards. But this trade always depended on how quickly one was betting on for Saudi crude oil production to bounce back up. By the looks of it, they've done a far much better job than previously anticipated. Now the next step was aggression between US and Iran, and there has been economic sanctions against Iran that could potentially be felt relatively soon. And apparently there was some report that the Yemen the Houthi, I think they're called, separatists in Yemen, potentially, they said that Iran wanted to do another strike or something like that. I'm not sure if anything of that is true. But I think maybe the next leg of what could drive crude oil prices could be the risk of military escalation. I personally don't think, it could happen. I'm not saying, I don't know exactly. I'm not a geopolitical expert. But the pressure's there, and there's more pressure applied, so it's more likely that something bad will happen. I personally would not do it, because if anything happens now, Iran is going to get blamed, and then, there's going to be maybe a war. And we'll see what happens, but I don't think it's going to be good for anyone, really. War usually is not. But we'll see what happens. In either case, that could happen, and I think that's keeping prices slightly alive now. But unfortunately, it's just a comment from either Iran or Mr. President Donald Trump could cause things to go straight up or straight down. You could also have some comments about crude oil production that could shift things. For now, though, looking at the chart, people are still positioned for more problems ahead. That's why the trend is short and bullish above 63.07, and the market may actually go up here. It really depends on what you think is going to happen and when you think it's going to happen. If you think it's going to happen within the next few days, then yeah, just be long. If you think it's going to drag out, it's going to take maybe 3-4 more weeks before anything happens, then you probably should not be trading this, because at one point, crude oil production will be restored, and then at that point the market is going to try to close the gap, because there's like a theory out there that most gaps are closed. I haven't seen the problem with most gaps, though, like this one here, for example. If you would have shorted the gap in the beginning of the day, is that the problem with the gap is that if you would have shorted here, you would have been up right now. According to this chart, if the market open here, so you would have been up with $3 per contract. However, you would have needed to endure $2.50 loss per contract before the market. Actually, it's $3 and 2.59. So you would have need to endure that stress. So all strategies, even though some people say, and I haven't seen significant statistics on this, but some people say all gaps are closed, and there's some people that what they do is to just look for these gaps and then bet against it. So I think there's a situation where it could work, but then eventually you get caught out, and you could be in a situation where you lose a lot of money. Gold prices. Now gold prices remain bullish, so you had a break to 15.12, which was the high here. This is the Fed rate meeting high. The market's now upwards. We've been talking about buying down here for some time, so there's no change to this. Markets go ridiculously slow. Even if I wanted, there's nothing I can do about it. I do think we're gonna go upwards, but with this speed currently, we might breach that high by October 23rd. You can see that in the bottom. If it just maintains like this sort of speed, October 24th to October 23rd, unless of course you have that panic button thing. So maybe this is a good spot to book some profits, and then maybe look for a pullback. When is that pullback gonna happen? Oh, one knows. German DAX. Okay, this is German DAX. Market being a bit weird, I think. The market rallies. Of course, you got the QE, we got the rate cuts and everything, and the market is positioned for some decent economic growth. However, you got bad data hitting your face like that. The market, someone still decided to buy. I'm not sure who it is, but someone is obviously buying, and we'll see what happens if they're going to be too keen on holding long on a break to 12,302. Take this out, we can probably go down to 12,101 and probably lower. Remember, I have not always been bearish. I was bullish from here up here, and from here I've been bearish. So that's why I'm bearish. You always need to ask people from what level they're bearish. There's some people that are always bearish. I know people with far more, say, sort of recognition across the world than I have, that have always been bearish. Of course, it's fine to always be bearish if you don't actually put your money where your mouth is. But if you're like me, you put your money where your mouth is, you need to actually have a system where you can actually try to make some money, and not just having a system of how to get a lot of views on Twitter and in articles. Because the bad story with the bad monster, the debt, the money printing, the QE, that's the bad guy from today's stories in modern finance. And obviously everybody wants to read about the bad guy because it's far more interesting than well, I don't know what I would call my view, but I just try to go with the charts telling me we should go, with the help of a bit of macro fundamentals. And what I can tell you here is that the macro story tells you that you should be very careful being long at these levels. And then you have this technical pattern with the market trading lower. You even have gold rallying, so at least there's some stuff, or some assets are actually trading in line with, I think, is the prevailing in current economic situation. Now, this is the S&P 500. This is interesting. You have 1, 2, 3 lows pretty much at the same level at 29.77. I did an article about this on Investing Cube yesterday as well. And the idea here is that we trade below 29,799, we'll turn bearish. On the other hand, we're trading within a little rectangle. So if we take out this level here, which happens to be the highs here, but also the all-time high from June to summer, then that would potentially lead to a 46.3 point move. It's not going to be easy because we're sort of stuck within this funny looking sort of cap by that trend line. But if we manage to trade above it and establish us above it, things are going to be bullish again. Now, I got a question. A friend of mine, if we can take a look at silver. So let's take a look at silver. So silver did have a nice little rally yesterday. And I remember this one. Oh yeah, this is an old one we looked. The idea was to buy here at 16.59. This is those times. I don't usually trade silver that often. At all, actually. I haven't traded for quite some time. What a move. 18% in not too many days, actually. In 22 days. Okay, so what's the stats or situation of this market today? Technically, I think, looking at this today, this was a descending triangle, sort of. Actually, let's just treat it like a normal triangle like that, right? So there is different ways of measuring the target, but you have this section here, the midpoint, which is what I suggest that we use. We actually already reached that target, actually. All right. We also can have the base, which is like this, which suggests a $7 move, which gives you this crazy target up here, which I don't think we're going to reach. So I'm going to be less aggressive and just grab something like that. Okay. And we're going to forget about these other two. And we're just going to use this. This is natural resistance. It's the last prior high. Now, look at this. We know that the trend is bearish, bullish. We know we already hit that target, but we know as well that everybody's sort of it's a bit like Bitcoin now. Everybody's sort of getting enthusiastic about silver. Now, in the short term, you have this low here, which is 1750. And you have something like this. Funny looking inverse head and shoulders with a head left, right shoulder, and a head with that little difference, which gives you the target, which you also already reached. So we're looking at that move. I think we have all these longer term targets, okay? Looking at this today, undeniably the trend is bullish. Undeniably we could potentially hit higher levels. Undeniably I'm bullish gold. Because my friend actually told me this when we had, I think it was drinks a few weeks ago. He said, use a signal if you find that the silver is problematic to analyze, because that's what I said to him. I don't really see any well-defined patterns in silver in the short term. And then he said, well, buy silver when you think it's time to buy gold. And with gold, I'm very confident to say that the trend is bullish above that level I mentioned to you. So I'm bullish on gold, so I do think this could probably go upwards. Now, in gold and in silver here, we already moved a bit, so there's no point buying now, because it's just unfortunate, it's a bit too late. But you can add these fibs on here, and you have the first fib, and then you have the 50 levels. So I'm gonna take a level between the first fib and the second fib, which is the 38.2 and the 50% correction level. Now that level is the 18.16 level, and from this level, if someone put a gun to my head, I will buy it. In you know what? And if we look at this, I mean, I will probably look at it anyway. I don't think it's just a trade that you need to have a gun into your head to actually trade, because you're actually dealing with a trend here. In other markets, you're not dealing with a trend, so it's actually, at least you have a trend here. So this is something to pay close attention to. Okay, let's see if you guys have any questions. So we've got a questions by Nichols. Can you tell us about the COT report? And Ronnie says, is there an easy way to pair the strongest versus the weakest charts on a daily basis? So about the COT report, I will send you, we do have a report on the COT that Inno wrote. I'll send that to you and you can read it. Sorry. You can read the report, see if it helps, like that. And also in our chart section, so if you click on calendar, the COT is updated. You can find the COT charts down here. So here you can see, for example, pound positioning. You can see that the non-commercials net positions is short, so they're short the pound, and you can get a little bit of an idea. The only problem with this though is that you don't get all the data you need necessarily, so it might be better to find another chart online. I do not want to go to investing, bar chart, been around for years, these guys. Maybe this could be something. Currencies, let's take a look at the euro. So this is a slightly more complicated, but you can see data here from 2007. So here you will need to figure out exactly what is what, but here you can potentially use that information. So I'll send you that link. The reason why I have not a huge interest in the reason why I don't actually use the actual COT report is that I don't really actually find it very useful, because it's such a long-term report. It's updated weekly, and the COT report can actually tell you that the currency can be overbought for quite some time. So you'll see that the currency can be overbought for a few months, and it can make sense for some people, but I don't necessarily use that one. So we've got Adam Webb here, moderator apparently. Thank you so much, Adam. And then we have Ronnie Giles. Good morning, Alex. Is there an easy way to pair the strongest versus the weakest pairs on a daily basis? There are some gadgets. There are some gadgets that can help you to sort of see what's the strongest and weakest for the day. You have like currency ranking indicators that can help you with that. I think currency heat monitors that you can use. And then you can, I mean, some people try to sort of combine the strongest versus the weakest and try to make a trade idea or trade strategy around that. I tried it myself actually to work with something like that. I had a developer that was looking combine the strongest versus the weakest and do that on a daily basis and then try to remodel. But we didn't really find like a good combination that would allow you to just leave it automated. But we can see here currency heat map. Let me see here. Let's go to investing then. Well, this is the trading view one. So this is the heat map. I don't know though if it is for today. I guess it is for today. It usually is. I don't actually use this table normally. So where's the action then? Aussie dollar versus the Japanese yen. Maybe here, actually here, Canadian dollar versus Singapore dollar. So then the idea would be to use this to get an idea. Well, you need to make this a line chart because it's not, doesn't provide candles. So if you did have this chart, there's something really weird here. This chart is updated in 2017. So let's see if there's anything better. CAD yen, maybe. So this is CAD yen. Let's make this a line chart or candlestick chart. So this is the CAD yen. So this is one of the stronger moving markets today. And then you could potentially use this to try to figure out some trading strategy. But you will need to do some manual work. So you can see you have a bit of an uptrend. And here at 9 a.m. people decided that it's time to sell some yen and buy some Canadian dollars. So you could probably maybe do something like this if that's what you believe in. So that's one way of using it. So we got a question. Isn't it a base of change, not total trend? So for the COT, and I'm not an expert on the COT. I have read about it. I studied it, but it must have been like at least 10 years ago. I actually did my thesis on this. I remember now. I did my thesis on this. And that was in 2008 to 2009. So it's literally 10 years ago. So it shows you the open interest, and it just shows you how many contracts are long, how many contracts are short, and then they split it up into different groups. So if we take just crude oil, they have the commercials, which they say is producers, merchants, processors, users, swap dealers, which is the red line. And then you have the non-commercial or large speculators, which are supposed to be managed money and hedge funds. And then you have the small speculators. So people say that the commercials sometimes are going to provide some input because they know the market the best. That's what some people say. Some other people say, well, speculators, they don't know what they're doing, so you want to do the opposite. So I think the best thing, I think what most people do in general is these non-commercials or large speculators. That's what most people look at. And then they try to sort of see how they are positioned. So are they very long or are they very short? That's what they try to do. And then they try to, you can, if you wanted to, I think you should be able to figure out and sort of clean the chart up and see if people are very, very short or people are very, very long. And that's the net position. You also have the actual contract sizes here, but people try to net it. The one issue with the COT is that for everyone that is long, there's also one that is short. So it will inherently be so that, like here you can see the commercials are very short, and then you have the large speculators and the small speculators are being very long. So they will always sort of neutralize each other. Now if I read this correctly, and sorry if I don't, what you want to do here, for example, you can see that on the way up, let's see, 5 years hopefully can be good. So when crude oil was on its way up, the speculators were long, and the commercials were hedging. I guess they reckoned they wanted to lock in the price. They thought they were getting a good deal. But here, in fact, it looks like they didn't really good, a very good deal, because the market did go up. Yeah, you need to sort of figure this out by yourselves, unfortunately. But people would say, look at that extreme, look at that extreme, look at that extreme. But clearly here, at least in this market, looking at extremes would not help you. Okay, guys, I think I'm going to wrap things up. Thank you so much for watching. Please do like the video, and hope to see you guys tomorrow, same time here at 9:30 a.m. London time. Have a great day. Thank you, and bye.